Hey everyone, welcome back to Corporate Dakota, the place where we dissect the sometimes boring but always important world of corporate filings. Today we're diving into a report from Putnam PanAgora ESG Emerging Markets Equity ETF. It sounds fancy, but is it really delivering? Let's see if it's a pot of gold or just a shiny pebble. This report covers a single year and we need to know what it invests in, how it performed, and what changes have been made. It mentions environmental, social, and governance factors. So let's see if it walks the walk and if the returns are any good. Before we get started, if you enjoy breaking down these kinds of filings, subscribe for more. We also have a Discord. The link is in the description. Come join the conversation. First, a high-level summary. As of April 30, 2025, this financial report was published. So what's important? This is an annual shareholder report which has financial information about the fund for the period of May 1, 2024 to April 30, 2025. It even says that you can find information about this fund on franklintempleton.com, regulatory fund documents if you want to view it on a website. Let's get right to the important facts investors care about: the fund cost, the filing details fund cost for the last year. It is based on a hypothetical $1,000 investment. For the Putnam PanAgora ESG Emerging Markets Equity ETF, the cost was $63. It's important to consider these expenses as they lower your returns. Keep those numbers in mind. Now let's examine how the fund actually did. For the year ending April 30, 2025, the Putnam PanAgora ESG Emerging Markets Equity ETF returned 10.08%. The fund compares its performance to something called the MSCI Emerging Markets Index, NR, which returned 9.02% for the same period. So the fund did a bit better than its benchmark. Now, what helped and what hurt? Taiwan was a top contributor related to their stake in Taiwan Semiconductor Manufacturing, which does contract chip making, which meant the stock did well due to rise in demand of AI chips. On the flip side, South Korea was a top detractor. Basically an overinvestment at car manufacturer Kia, which lagged in earnings, detracted from fund performance. Overall, it seems that AI hype actually helped the fund, while general car industry worries created the detraction on investment. So 10% in a year sounds nice, but how did fund perform over time? This report contains something interesting, a line graph of the fund since its inception date, 1/19/2023. The fund's past performance is not necessarily an indication of how the fund will perform in the future. The graph doesn't reflect the deduction of taxes that a shareholder would pay on fund distributions or redemption of fund shares. The numbers paint a picture. Since its inception, the fund has an average annual rate of return of about 6.35%. In comparison, other indexes such as the MSCI All Country World ex-US Index also did fairly decently at 10-15%. Okay, how big is this operation anyway? As of April 30, 2025, the total net assets are around $43.2 million. It has 113 holdings, which includes derivatives where applicable. The amount paid in management fees amounts to roughly 21,714, given a unitary fee. The portfolio turnover rate is 90%. This means that the fund is actively buying and selling different positions. So after this amount of time, we know that it has some investments and ESG things, but what specific sectors or countries are they? Let's look as the portfolio composition shows that about 31.5% is in China, about 18% in Taiwan, and approximately 15% in India. This breakdown reveals that China and Taiwan are the primary areas of investment of the ETF. Did anything change with the fund in the previous year? It appears Franklin Resources finalized its acquisition of Putnam Holdings, where one of the subsidiaries advises and constructs the ESG portfolio. So basically, a parent company bought its subsidiary. The new contract was identical to the previous ones, except for some effective dates and other non-substantive changes, via the story of the report. Now let's briefly peek at the actual financial statements, the heavy numbers. The auditor, PricewaterhouseCoopers, says, "The financial statements present fairly in all material respects the financial position of this fund. We always love an unqualified opinion from accounting firms." Scrolling down into the statement of assets liabilities, it shows that about 43 million exists in investments in unaffiliated issuers or investments that aren't affiliated with its parent company. This is balanced against about $63,000 in total liabilities. Finally, let's look at the revenue. Investment income after netting out the foreign tax amounts to $894 and $851, factoring total expenses of roughly $200 and seventh income of around $694,000, leave $3,143 and one fish. And so, after digging through this report, what's the takeaway? Assessing Putnam PanAgora ESG Emerging Markets Equity ETF Fund. The fund shows strengths by focusing on high growth areas like AI through its investment in Taiwan semiconductor. This could be a winning strategy for generating returns. The downside is its high portfolio turnover rate. A 90% turnover suggests a high level of trading activity which increases transaction costs, and that's not accounting for taxes. The fund's concentration in China and Taiwan carries geopolitical risks. In conclusion, I would be concerned with the ESG implementation as it appears high risk, but I would say that, at least for now, the ESG implementation is not actively hurting the fund. So what are your thoughts on this ETF? Do you think it will keep outperforming the market indexes? Share your thoughts and let's discuss in the comments. If this analysis was helpful, make sure you hit the like button and subscribe to see more videos like this. Also, join our Discord server in the link below. Thanks for watching and see you next time.